Wednesday, May 24th. Market analysis, Stan Ehrlich. Good morning. The middle of the trading day, 9:49 California time. Yesterday, my recording was very late. I had technical problems. I apologize. Looks like we're in business today. I always start out with the stock market indexes, this S&P 500 in particular, and again today. Now, I'm getting the downside correction, and I expected a small one that I expected, forecasted, talked about because of the lack of upside follow through after making new highs for many months. Stalled out for a couple of days, which it probably shouldn't have done, apparently not. And then yesterday, kaboom. We came down at the beginning of support to one of my support lines and stopped, but that's it. Didn't rally. This morning, we gap down. And there's a possibility, I don't think that's going to be the end result, that this gap is a downside breakaway gap, the beginning of a bear move. But I don't believe that. I do not expect that. I think it's going to end up being a common gap. And we're going to go right back up and close the gap by touching the low of yesterday. Just for comment's sake, that low was 413.68. So, I don't think it's going to stop. I think it's going to go up, close that gap, and keep going up even more and continue the trend, the bull market of 2023, and make another series of new highs for longer periods of time. Now, we're not particularly oversold at the moment, but if we do go down a little more, which I can accept, into this blue trading range, 408 down to as low as 402, which I really didn't expect at first, but now there's a chance that could happen, we will still be in a significant major area of support. So no major long-term damage done. And we'll probably get oversold if we can get there quickly. And it's very possible it could bounce off 408, and we're trading at 10.5 right now, so only a couple points and a half could still happen today. 410.50 happens to be almost exactly where that yellow dashed line is, and that is the approximate middle of a very profound support and resistance area over many months, going well back into last year. So we're in the area. I can afford to see a little bit more of a dip, 2 more, 3 more, 4 more, 5 more points, maybe 6, 7 at the most. That's still not terrible. I do not want to close or get below 403.60. Those two lows on April 26th and May 4th. I don't even want to close anything lower than those two closing prices, so we're still talking 406 and higher. And again, we're 410.5. So not too much lower. Down today, right now, 3.5 points. The gap to close, I like that. Remember, gaps are like a black hole in space. Markets tend to go back and trade in the range. The gap sucks the price action back into it. Let's look at DIA. There is corroborating evidence to some extent with the Dow ETF here. So we're back down to a very important support level. We're trading right at it, basically, got a little bit below it. And right now, 327.96, call it 328, flat. We are at a previous and still legitimate bull trend line across the blows from October and March. It's the only bull trend line we've got. And very important, we could close a little bit below it, or maybe a day or two, and then all of a sudden spring back up again. That does happen, although a little unusual, but the trend is your friend overall. We've gone into this big sideways trading range ever since November and not been able to break out of it. We made lower lows, then bounced right back up into it. We failed to make any substantial new highs ever since the beginning of the year and hit resistance just recently and have now pulled back down to a new low for a couple of months. Nothing terrible, but certainly to be cognizant of. So any significant rally of a point or two or more from where we are right now would be very nice. Bouncing off major support areas and going up and closing the gaps, and we'll see if we can get more strength after that. So I'm voting in that direction. So we could be very, very close to a minor low, maybe not today. Let's look at the QQQs. They also, like the spider, gapped down this morning, and they have a tremendous amount of support below the market. You have to remember the Qs have been making new highs for the last since August. Was it April? New highs since April of last year, over a year, and staying there for a couple, 3 days. And this dip of yesterday and this morning basically just comes back to the middle of the range from a few days ago, which was new high ground in the first place. This is looking just like a very typical, normal, and an overbought condition, downside correction in a bull trend. You could draw other bull trend lines besides the major one that haven't even been broken yet, and that would be the one right here. So Qs have been the strongest, the best, the fastest, held the best on downside corrections, built the head and shoulder bottom that they built, broke out of the head and shoulder bottom, with the head being in October. We had a June first shoulder and a January last shoulder. It's on the screen right now. Shoulder, head, and shoulder. Broke the neckline. Minimum upside objective has come. We've come close, but not there yet. And in the process, the last couple of days got overbought. Come on, this is a minor downside correction, it appears, in an upwards moving trending bull market, period. I don't expect it to necessarily stop, by the way, at 346.80. In fact, that's just simply a minimum objective. Head and shoulders in most patterns can go and do often go further, sometimes a lot further than the minimum objectives. Okay, futures. Now, the S&P 500 is the same as the futures contract as the SPY, except the different trading hours. So we do get a slightly different formations and or signals with the spider as opposed to the E-mini. So the E-mini got into resistance, like the SPY, and pulled back, and it's at a support line right here, right now, today, at the moment, almost exactly. Could hold here. I don't see enough technical evidence yet that it's going to crash. We are not oversold. And by the way, I failed to mention, if you look at the DIA, so I'm going to go back for a split second. The DIA, because it's been very weak lately, has already gotten down in its relative strength index into the 28 area. That's low. Now, I like 25 and under for officially oversold, so it got very close. We don't always get what we want, but close can do the job sometimes. Another vote toward a beginning of a rally here. Back to, futures. Okay, so the spider could very well stop dropping very soon, price-wise and time-wise. Next chart is bonds. Talked about the oversold condition. So far, this could be a new low close, but it's not below yesterday's low, which was a new low for the move down, still an oversold condition, but a higher close. Sometimes the beginning of something, stable or a turnaround, a little bullish, but it's a very, very common, not particularly trustworthy type of reversal. So I don't give a lot of credence to it whatsoever. More importantly, oversold for 4 days. And much more importantly, near a bull trend line and at previous support levels. Next. Same kind of commentary for the 10-year notes, oversold for 4 days, a little bit below previous support, which held pretty well for a while, and the oversold condition is important. We could be beginning the next rally up, and I'm very bullish on interest rate futures, and I think it's going to be only a matter of a few weeks before we see the market making new highs for many months. Next, crude light. Here come the energies. A little bit of a higher high today than the last couple of weeks. Nothing particularly profound, but most importantly, still in this broad area of resistance. You really need to start to close above 84 in order to get any major bullish out of this. So we're definitely in an area where it could turn around and start heading south and make new lows for the trend. I am bearish. Trend is down, looking for a sell signal next. Heating oil, basically the same commentary, came back up into some resistance, having a little trouble right in this area of 2.37 or so. And I think it's going to start to turn down very quickly, very soon, and make new lows for many months, and a huge bearish major downside breakout if we make lows lower than the low on May 4th. Okay, next. This is natural gas, and we had a buy signal. It worked out extremely well. We almost bought the exact low. I'll zoom in for you a little bit here. The day after the green bullish engulfing ER buy signal, we have a trigger hit almost exactly the low, made very good money on the first day, flat next day, tiny dip next day as far as close to close is concerned. And the next day took off like a bat out of you know where. So huge new high, new close high, looking great, but it got overbought real quick. That's how big that rally was. So overbought conditions you're inclined to think it's going to have a little bit of a dip. Well, it did, and it came back to a little bit of support. Yesterday, we dipped down to a minor new low, nothing huge here. And today, we're starting to see a slightly higher high than yesterday and a higher low and a higher close probable. So we could have turned the corner here yesterday for the low of the dip. I would not be surprised to see the market climb from here and very soon make new highs. And the next chart is gold. Remember, gold, silver, and platinum, we caught the bottom of the market. For gold, it was February 28th. Turned out to be a small double bottom. Official green ER buy signal on that day. Heck of a good move. Got overbought, started to flatten out, started talking about problems price action wise, and a few days ago we had a minor downside breakout that developed into a little bit worse than that, sideways for the last couple of days. It's going to head south. This thing I think is turned around. I'm sorry I didn't get a sell signal on the top of the market, but we did get a false upside breakout in overbought conditions, and that did the job. When we made new highs for the trend, the closing price was not above the previous highs, a key, in overbought conditions, and that was the nail in the coffin. So here we are, bouncing a little bit off oversold, but lower. Tierra del Fuego, silver. What a double top. Unbelievably accurate price-wise, almost to the exact tick. Both of the highs have official ER new short sell signals because they're red bars. Both highs. We got a complimentary, so to speak, a couple of days later after the second and last of the double top sell signals. And kaboom, the next day it just collapsed. Downside breakout. Now, I measured somewhere on those couple of days the minimum downside objective by using this little dotted blue line, because that is the lowest low between the two highs, and the distance from that low to the average high between the two highs is the depth of the formation. You take that amount and you drop it down from the lowest low between the two highs, and you get that price level right there. So 2290, we almost made it. Not quite. Today, closer and closer. New low close. What can I say? It's working right out of a textbook. Classic. Now, again, a minimum downside objective. It can easily go significantly lower than that. I would not be particularly surprised if it dropped off into the 20.6 area. Next, double top of sorts in platinum. You could call it a broad one over several months, or you could call it a short-term 3-week head and shoulder double top formation. Definitely in a resistance area. It made new highs and actually did close a new high ground, but the next day, kaboom. So that was no follow through. And then it couldn't do it again a few weeks later. Now today it is breaking out of the double top formation, which I talked about the last several days. We have a new low and a new low close since it started getting overbought back on April 13th. So how much lower can we go? Well, I just told you a moment ago, let's just eyeball this for a second. In the middle of the two highs on a sloping line downward slightly would be about this price, 141, and the low 141. 100. Okay, so 941. Where are we going? Here we go. Here we go. 941 is right down here. Whoop. That is about the minimum downside objective on this pattern. 942, let's call it. How about that? It's also back to support in this bottom area where we turned around with an official buy signal. So I'll fill in the blanks for tomorrow, but that's it. Downside breakout. What can I say? Next. High-grade copper, following through on the downside. Had a couple buy signals that did not work. Disappointing. But please, people, remember, I'm very, very, very cautious about my risk factors. I don't like taking big losses, and I don't. That's why these yellow dots represent the initial stop used when you get into positions, but that changes very quickly. In fact, it could change the same day that we get into the trade, and oftentimes does, creating less of a risk, smaller profits by using the automated trading system ER signals. In this case, hey, they lost a little bit of money twice, probably. There's a small chance that one of them made a little bit. Anyway, new low close, but oversold now. And we've got a lot of support going back many months down in this ballpark that it's nosediving into. So I think it's about to hit a low, maybe of some significance, but a little bit lower still. It's only our first day oversold, and there's a broad area here of potential support and turns. Nice buy signal there. That's a good one. Ooh, really nice sell signal back there too. Although, frankly, not a heck of a lot of signals. Next chart. Soybeans. Oversold, going sideways. That is one way to eliminate an oversold condition. You don't have to rally. It usually does. This has been flat for the last couple of days. What can I say? But I'm bearish, looking for lower levels, at least a test of the lows way back in July of last year. And that's at 1272. Last quote, 1322 and a fraction. Next. Soybean oil. We got a buy signal 2 days ago. Monday. We bought it on Tuesday. Closed with a very small loss yesterday, Tuesday. Today, Wednesday, it's starting to move up. We're now net profitable at the moment and looking for new highs above today's, which is almost the same as yesterday's high, and the high of the trigger day, the signal day that is, which would be about 49.05, I guess, something like that. Actually, let's just say high is exactly 49.08. So getting above that, I'm going to feel a lot better. So it should start moving up a lot quicker. Meantime, raise your stop a little bit if you don't have the automated system. Next, soybean meal. Oversold for about the fourth day in a row. Double checking something, that's good. And in a very, very long-term broad area of support in an oversold condition, probably going to have a rally here soon. Don't sell short when markets are oversold, no matter how you measure it. Not a smart idea. You end up selling the bottom of a break too often. Next chart. Wheat. Had an outside up day yesterday, but it wasn't an official buy signal. So dropping down today would have been relatively normal as long as it doesn't get below yesterday's low. But again, I like the bullish engulfing, but I don't have an official buy signal. On the other hand, ladies and gentlemen, we came super close to having an official buy signal. The RSI low yesterday was 46.07. All I have to have, sorry, that's the wrong number, 26.81, and I needed 25 or lower. So it wouldn't turn green unless the 25 or lower, but it came damn close. I see we're low and last and dropping, maybe making a new low by a tick or two just now, but this is right in the ballpark, a little bit below actually, where the risks are very small if you keep a tight stop. And if you're right, and I know it's a gutsy trade and you buy it, your rewards are greater. Maybe you want a little bit of proof. I like that, but the key word was a little. I don't necessarily need a gigantic move in order to be convinced that it's going up. Next, live cattle. Watch it. We're right smack at this double top resistance area with an outside trading range, which may not end up being a bullish engulfing or have the effect of a bullish engulfing. Sometimes I've noticed over the 5 decades plus I've been watching prices, when you have these kinds in this condition and situation, I like to call them bass backwards because they actually are bearish instead of what usually appears to be bullish. We'll see what happens the next day or two. This is going to be interesting. Next, live hogs, oversold Monday, Tuesday, and today. Today we got a little higher high, and it's a tiny bit lower on the day. But yesterday and today, there's no net change, significant up or down movement. It's just holding here, and that's in an oversold condition. So we did stop declining, sort of, and I'm now expecting a little bit of a rally, but the trend is definitely down, and I don't think it's going to carry very far. Looking for lower lows soon, but maybe a bounce first. Next, OJ. Raise your right hand up in the air, twist your wrist, and say goodbye. This orange juice market is just on fire. I don't know how that can happen. Extremely overbought again, getting up in the low 80s, and just might fly like a rocket here for a day or two more. This is a very substantial bull market, a stair-stepping bull market. We've gone up into overbought conditions for many days in a row, ended up with a correction finally, pennant formation developed, overbought again on a big rally, and this has up more elbow room if you measured moves. So what can I say? You have to be bullish orange juice, but don't buy a market when it's in overbought condition. You want to buy it down here when it was oversold, darn it. This is prime territory for potential short sales, but you're not going to make too much if it's a real long-term bull market that is not stopping. Next. Same comment a couple of days ago, I'm sure, for cocoa. We've had our correction back down to support, frankly, for today's low, and that could be it. It may be ready to go up into new high ground. One more chart, sugar, sideways, somewhat of a pennant formation is formed. Keep an eye on this for breakouts. I know it's a little low and last at the moment, and maybe a new low close for a few weeks, 2 or 3, but no particular breakout yet. So no comment, and I'm going to leave you that way. Going back to the S&P 5, oh, I've got a corn chart. Sorry. Okay, got oversold, rallying up into resistance. I think it's going to fizzle out very shortly, maybe up around $6 for corn and turn back down. Little out of sequence. Sorry about that. Now, E-mini, where we began. Have a great day. Talk to you tomorrow. Thank you very much.